Warning, warning, warning. This is definitely not a drill, guys, because it seems like another banking crisis is about to take place. It seems as it's imminent. Now, before we continue with this video, I do want to say this video is not financial advice, guys. It's for entertainment value only. But I do believe cryptos and certain stocks or the stock market does pump before the collapse occurs. But maybe in the middle, guys, perhaps soon, they may throw a curveball, which is a black swan event. Why? Because of this. New UK Metro Bank shares plunged 27% just today. This was yesterday, down minus 62% in the last month as it tries urgently to raise £600 million, guys. Wait, what? Banking crisis or crises 2.0 is coming, guys. I can't make this stuff up. Everything's just fine. Uh-oh. Right, as soon as one bites the dust, you guys know. This is how you guys know the economy is so terrible right now. Everything's flipped on its head. How is cryptocurrencies pumping, right? The stock market has been, when the economy doesn't look good at all, guys, because we told you, bad news is good, good is bad at this point, right? But if we go to the stock price, guys, the shares right here, look at this. It just kept plummeting and plummeting and plummeting, guys, non-stop. Now it's starting to bounce back up, guys, but it's in a downtrend as we speak, right? If we take from the high right here, minus 67%, but from the actual high, look at this, guys, before it plummeted, that's minus 72%. If you go back here, the last time the stock seen minus 72% in a short time, in short duration, was when? Look at that, minus 7%. When the 2020 thing happened, right? Before the 2020 thing, guys, you guys know what I'm talking about, right? The stock was already plummeting beforehand, guys, but when that event occurred, then it started to it plummeted. It dumped once more, then it started to bottom out, right? Which is fascinating, guys. Could this foreshadow something incoming soon? Why? Guys, people just think we're just making stuff up. Are we truly? Because from investing.com, JP Morgan's top analysis sees similarities to 2007. Wait a minute, what? So they're starting to see similarities to the 2008 recession, guys. Look at this. Strategists at JP Morgan Chase & Co. believe there are some similarities in investor sentiment today to the period leading up to the global financial crisis of 2007 and 2008. What? In their regular column to JP Morgan's clients, the analysis once again reiterated warnings about challenging macroeconomic fundamentals and headwinds for risk assets. While they acknowledge that the current situation is not identical to that time, the analysis highlights certain common themes that warrant caution. There we go, guys, right? So these people are warning that maybe another 2008, shall we just say a black swan, can occur here soon, and then we pump back up again, guys, right? I don't know. Our cautious outlook will likely remain in place as long as interest rates remain deeply restrictive, valuations expensive, and the overhang of geopolitical risks persists. Since the start of the year, the headwinds for markets are stronger and tailwinds weaker. In our view, lags in the impacts of high rates are longer this time, but we believe most of the negative effects are still to come, they wrote in a note to clients. Wow. So they still believe, what is this? That negative effects are still to come, guys. Right? Because of the Fed with the interest rates, they're just holding it up here, guys. And maybe this is about to tell us what's about to be incoming, guys, because the Federal Reserve just pulled another minus $20 billion emergency OCE liquidity away from the banks this week. In 2020, they pulled about minus 100 billion in over 4 weeks to cause the banking crisis. They have pulled minus 70 billion the last 3 weeks, guys. The Fed is purposely causing the market crash just like they did in 2020. What do you guys think? Now, if this is the case, that means we'll probably see by maximum time frame, I think November, guys, max, so maybe even this month, a black swan, right? So we're not out of the woods yet, guys, we're not out of the woods, but I still am very, very, very bullish, because no matter what, even if a black swan does appear out of nowhere, guys, I know for a fact, this is just me, not financial advice, I believe they're going to pump the markets again for the last hurrah, right? And that's when I'm going to start cashing out, guys, because I don't see how they could collapse the market before the 2024 elections and certain things like this, guys, right? It wouldn't really make sense to save face. What bankers are saying about another possible crisis? It's all planned. Check this out, guys. They're even saying it right here. You can't make this stuff up. It's actually hilarious.
Are they indicating any real stress that is making them truly concerned about another crisis?
They're extremely cautious. No one will talk of stress, but they are extremely cautious. And what if I tell you that the list of banks that you just put up,
they are extremely cautious. But wait a minute. If they're extremely cautious, maybe we shouldn't be. Maybe we should be very bullish. The opposite of what they do, right? Because they always try to trick the retailers, us the people, guys, right, into doing something else while they do something else. So
are actually some of the better performing banks this year. When you take one step lower, you go to the regional banks, they're getting hammered. We just had a story out today looking at the shorts on a lot of those names. It is the short interest in those names at a higher level today than it was in March. That is certainly a sign. March was a tough time for many of these banks. So I want to take you back to something you said this morning, Lisa. You talked about the phrase narrative roulette in markets. I'd argue when it comes to banks, there's been narrative hibernation. They were facing severe problems. The Fed stepped in with a solution patch. But the problems didn't necessarily go away, and it's becoming increasingly
Exactly. Why did they step in, guys? Because if they didn't, the rest of the banks would have collapsed. It would have been a contagion. It would have been a domino effect. One by one, they would have all bite the dust, guys. Right. This is why I believe they're going to come in again if this does occur again, guys. If another black swan takes place, I believe the Fed will come in and swoop in and save the day.
Increasingly clear that with every whimper and howl in markets, the Fed is not going to come back rushing to the aid of these banks. So their problems are very real. We have a lot of analysts saying that treasury markets need to stabilize for these bank stocks to stabilize. Fine, but what would cause those treasuries to stabilize right now? An indication of a cooling of economic growth. And that can't be good news for banks, especially regional banks that are a great proxy for the economy.
I take your narrative hibernation concept. That
there we go. If you guys would like to watch the rest of the video, I will leave it down in the link below, guys. Down in the description below. Now, even Gregory Mannarino comes into play and warns about Bank of America and the housing bubble. Interesting. Check this out, guys. Right, a Freemason.
So this is Bank of America. This bank that we've been talking about. Clearly the.
Oh, and by the way, Bank of America loves XRP. I don't know. Something seems interesting here, doesn't it?
Most troubled bank on Wall Street. That's a fact. I outlined this for you a couple of days. I've shown you charts. I've explained to you their problem with debt and everything else. Now, this is Bank of America. Let me just read this to you. Okay, Lions and Friends. And this is in your inbox if you subscribe to my free newsletter, link below. Lions and Friends, the most troubled bank on Wall Street, Bank of America, ticker BAC, which is saturated wall to wall with bad debt, including mortgages going into default, has a message for you. Bank of America says there won't be a housing crash, just some turbulence. To me, and I wrote, this is the kiss of death. We've heard this before. This is, history may not exactly repeat itself, but it certainly does rhyme. You understand? When you have a bank like this who's holding, I don't know how much, I already told you, the debt that they're holding, it's all bad anyway. Most of it's going bad, loan defaults off the charts, mortgage defaults, and then you get their portfolios, Bank of America, it's loaded up with bonds that are paying nothing, so the value of their portfolio is plummeting. So when you hear a statement like this, that there won't be a housing crash, you need to prepare for the worst housing crash in the history of the world by exponents.
Oh, that's what I have been saying, guys, right? Of course, a housing collapse, not a crash, but devastation is imminent, guys. Not right now, but this is what's going to happen. This is just what I think, guys. You don't have to follow anything I say, obviously, not financial advice, but this is how I'm going to play the timeline. I'm staying in, and I'm cashing out when I see Bitcoin probably create a new all-time high, right? These cryptocurrencies rise. And if it's in 2024 or 2025, that's how I know we're at the collapse or very near it. So I'll probably hedge my bets, guys, and take a lot of my assets out, right? Or exchange them for USD, maybe even a little bit of gold and silver, and a little bit of XRP. Keep it there, guys, just in case if anything does occur with XRP during the collapse and it pumps, right? So I'm gonna have multiple hedges, but mainly in USD. Okay, because I believe the USD rises like the phoenix at one point in time. Again, there's a narrative attacking the USD, but people always get wrong-footed, guys. Listen and pay very, very close attention, not financial advice. Now, when that happens, that's we're going to be in the middle of the financial meltdown, which means that housing bubble implodes, right? Pops. Well, every other, not every market, but majority of other markets, guys, will crash to oblivion, right? That's when, guess what happens? Exactly, you guessed it, right? All these wealthy people who are in USDE, right, or are hedged, will now buy every asset on the cheap, while you probably will start selling at that point in time, right?
So this is
That's what they always do, guys. It repeats, and then the rich get richer while the poor gets poorer, right? Do we see the game plan? But orange juice just keeps rising, guys, right? Live cattle, as well as olive oil, they just keep pumping, guys. But the Federal Reserve keeps saying the economy is fine. That's how we know things are very shady here, guys. Let us pay attention towards this new world, because it does seem like, guys, look at this. All the warning signs are here, and we haven't even gotten to the good part. I'm going to make another video, and we're going to continue with the series, guys, right? Because things aren't looking good at all. So let us pay very close attention and prepare. Not financial advice. But anyways, guys, hope you guys are amazing this. See ya. Wow.